Hello again, everyone. It's Vince Four from TradingWinds.com, and this is our update for May 12th, 2024. Hope everyone is enjoying their weekend. Let's take a look back here. What happened this past week in the markets? We finished in the green again on Friday. It was certainly a positive week overall for equities, one of the strongest that we've seen this year in terms of weeks, although, it was a grind. There's no question. As we spoke about throughout the week, some very small range candles along the way here. We really had one big update here on Thursday. Friday, back to a small candle. Now, one of the things I'm going to do this week on this update is I'm going to switch time frames for a second, and I'll explain why. I'm going to look at the weekly time frame here as we go through these charts. Now, I'm going to use the ETFs for the different uh, markets, the Dow, the S&P, the Nasdaq, Russell, etc., and then the different sectors. Here's why I want to show you this. If we look at the weekly time frame, have a look at this setup on the Dow on DIA. It looks pretty good, doesn't it? Not only not only do we have a significant upward slope on the 20 SMA, which tells us there's quite a bit of momentum here. But, if you look at the formation here, we had a very strong trend going. We then broke down. We remained below the 20 for about 3 weeks, and then we popped back above. We had a strong follow through last week. This is the all-time high here. So really no overhead resistance whatsoever. This indicates a resumption of the trend. You look at where we closed last week near the high of the week. The size of the bar was pretty sizable. Obviously, being an ETF, there is no earnings to worry about. I mean, this checks off every box, and it looks pretty good. If you look at the SPY, it's the exact same thing. Yes, it's a little ways away from the 20, but this indicates a lot of strength here, meaning, you have that significant slope, you pull back in an orderly fashion, and you retest that 20 basically 3 weeks in a row, and then you pop. You look at the Nasdaq, similar to the Dow here, you drop below, you immediately turn around. Here we are, very close to highs, no overhead resistance, etc. The Russell, same thing. Now, this one's a little messier. Certainly, there is going to be some resistance overhead. So small caps don't look anywhere near as good as the techs that make up the Nasdaq, the SPYs, and certainly the 30 big names in the Dow. But overall, I mean, we have long setups across the board here. Now, if we look at the sectors, here's energy, and we're right back to that 20. More important, sorry, not the 20, the this level that was tested many times and was a heavy area of resistance, which now should act as support. So although we don't have a long setup on the weekly, we could get one here this week, next week, as long as we hold that level. This is showing potential for upside. If we look at financials, XLF, a beautiful setup here. Not only do we have a nice setup here with upward slope, little to no overhead resistance, etc. This is about as clean of a cup and handle formation I've seen in a while. So a very strong setup there. You look at XLK, the tech stocks, they're setting up. XLP, consumer staples, not quite, but look at where we are. We're right at the highs here. We can mark a line across all of these highs here, and we close right there. So, we could see a breakout this week. XLU utilities, there's no setup here, but certainly we've been moving strongly here and gaining momentum as we go. So, what's interesting about this chart is when we looked at this a few weeks ago, all of this activity was overhead and looked like, it was going to have a lot of work to do. Well, it's quickly cut through that. So, if we talk about looking at overhead resistance using the volume by price indicator, we've gotten through the thick part right now. The road ahead gets a lot easier. right? So that's fairly bullish. You look at XLV, the healthcare sector, and we have a real nice setup again. Not only that, but we had pulled back to retest these highs and bounced. So again, and again, this is the all-time high. So another very strong looking setup. You look at XLY, we do have a buy. It's not exactly what we want to see. The 20s flat. The uh, bar itself for last week was very low range. We finished in the middle of the bar. It's not the kind of setup we want, but certainly a little more upside. We clear this high, and we've got a clean road ahead as well. Real estate, not quite there, still below the 20. It's one of the few sectors looking weak. You look at XLI industrials, pretty much at the highs here. Ready to run again. You look at XLB materials, same thing. Although it's messy, it's now above that mess, right? So clean road ahead, and you have a setup. Communications, you have a setup, right? Right along that 20, and this is the prior all-time high, so there's lots of room overhead. And finally, retail also has a setup. Now, again, this isn't one we're crazy about. I'd love to clear these highs first, etc. But as you can see, out of all these sectors, there's maybe one or two without a setup. Otherwise, they're all across the board on the weekly time frame, setting up long. Now, of course, we have to wait for follow through, but considering where they closed for the week, follow through should be very easy. In all likelihood, will happen first thing tomorrow morning, right? So, why am I telling you this? Well, yes, it paints a very, very positive picture right now. On the on the daily time frame, if we go back, we're quite a ways from the 20, so not exactly a spot I want to get in on, right? But regardless, if the market's going to follow through on these weekly highs, and it's just a matter of time before we pull back and set up properly again on the daily and go from there. So all signs here point to another leg higher. It looks like this retracement period is over, and now we're off and running again to the upside. As difficult as it may seem or believe, based on all the negative economic data out there, etc., the charts are really hinting at another strong move higher. Now, you know what I'm feeling, and the and there's another key red flag here that I still can't get past, and that is when I ran the scan for victory again today. Yes, there were a lot more setups than we've seen in the last couple of weeks, but what was interesting is by far, and I'm talking, 80, 90% of them here were to the downside, which is something we don't see very often at all. Now, that doesn't necessarily mean we will not follow through and have another leg higher, but it is very odd. It is very strange that we see as many short setups as we did on the scan compared to what these charts look like on the weekly time frame. Now, I did the scan on the daily, and the daily time frame is a little extended here, meaning far from the 20. So we may run into a situation where we come back to these highs, which is not far away at all, and then pull back, right? And then once we set up properly again, maybe at that point we'll start seeing more setups. The other thing is that this week is going to be one where we have a few economic data points coming out that really have the potential to move the markets. Not anything of significance on Monday, but on Tuesday we get the PPI number. And we get Fed Chair Powell speaking as well. So the PPI number comes out at 8:30 a.m. Eastern on Tuesday before market open. The Fed Chair speaks at 10 a.m. Eastern. Then on Wednesday, we get the CPI number. So we get PPI, CPI midweek. Both have the potential to move the markets. Now, and then we get building permits on Thursday. Those are the main ones. Those are the big ones. Certainly, if we go to the 1-star announcements, there's many more, but those don't generally move the markets or have the potential to. The 3-star ones absolutely do. And PPI and CPI are going to be the big ones. So this could be a week where we get some pretty big swings back and forth. It could be a week where we just take off here and start running if that data um, is positive. So it's going to be interesting here to say the least. But at this point, myself, I'm still a little hesitant to go in strongly on this market. Um, if we clear those highs back in here, I may feel differently. Right now, based on the scans and what I'm seeing on Victory, I'm a little hesitant. Now, there certainly are, as I said, there certainly are setups, um, most of which were to the downside. Here's one on Lee Auto, right? Now it is messy. I wasn't crazy about it here, so this is not one of my favorites. It is messy, no question. Another one was WOLF, all right? But and I've got another one for you in a second that I like much more than this. But um, there's many there were this week to the downside, and this one it's just that there's a lot of support down here, which is why it didn't make the final cut. But there are many like this. And again, it's odd when you see the type of clean setups that we're seeing across the board on the Dow, the S&P, the Nasdaq, the Russell, and all the different sectors. It's really, really odd that we get 80 to 90% of the trade candidates to the short side. So it's just giving me a reason to pause. And so I'd rather tread lightly here. Doesn't mean I won't trade the market, but I will do so carefully. And certainly if I'm trading any short setups while the market is setting up to the long side, I'm going to go in with half position at best here. All right. So we'll see what this week brings, but that's where we are right now.